Hi, this is Eric Sauer doing a stock recommendation for Amazon.com Incorporated. Amazon's traded on the Nasdaq, currently priced at around $324 per share. Over the past 10 years, Amazon has had incredible growth. It's grown over 1,000%, around 1,055% over the past 10 years. However, Amazon hasn't shown any profits. In fact, their profit margin is negative 0.27%. So they have a lot of revenue, and they're getting a lot of money in, but they're actually spending a lot of money out and actually having a negative profit margin. They're still investing for the future and investing for the e-commerce business. They have a earnings per share of negative 0.52, so negative 52 cents per share people are losing, and their return on equity is negative 2.35%. So all these statistics, they're negative, but they're not as negatively weighed as that, because Amazon's still a relatively young company. It's only about 10-15 years old. It's a little over 15 years old, but its rapid growth phases are about 10 years old. And so for that reason, I decided to compare them to Apple. And I know Apple's not a direct competitor with Amazon, because Amazon's an online retailer and Apple's a hardware and software company. But I think that their stocks are very similar in the fact that, Apple was an extremely high growth company at its young phases, and Amazon is kind of replicating that and kind of following the same pattern. So now that Apple's been through the rapid growth phase and they've become successful, they're at a steadier incline, a steadier growth. Right now, Apple's profit margin is much higher at 21.61%, a great profit margin, 21%. Each earning per share is 5.68, so $5.68 per share is earnings per share, and the return on equity is 33.6%. So Apple's in a very comfortable position. Apple's not gonna spike, and they're not gonna drop. For a very low risk investor, Apple's a great place to put your money. Amazon, on the other hand, back to Amazon, that volatility is going up and down. In order to become successful, Amazon has to start making a lot of money. The e-commerce business has to blow up. In my report, I explained that the free cash flow, in order for Amazon to meet the expected rate of return, has to grow. The e-commerce, the market, has to grow 7.5 times. I 100% believe that the e-commerce market will grow that. The question is if Amazon is going to match that growth. Personally, I think they will. I just don't think that they've proven that yet. With their revenue and with their profit margins being so far apart, the economic risk of other competitors like Alibaba coming in will take away from their market share. And I just want to see and hold off on the stock recommendation until Amazon proves its volatility, to have a little less volatility. Right now they're really high risk, but there's probably going to be high reward. I'm just going to hold off a little bit longer on the recommendation until they prove themselves just a little bit more. Thank you.